Good morning. I am Jaikumar, Assistant Professor, Department of Management Studies, SNS College of Technology. And now let us discuss on the topic dividend decisions. Dividend decisions refers to determining how much of a company's profit should be distributed to shareholders and how much should be retained for future. It is one of the three major financial decisions alongside investment and the financing decisions. Higher dividends provide immediate returns to shareholders and may increase the investor confidence. Retained earnings helps finance expansion, research, acquisition, and other growth opportunities. Management must balance shareholders' expectations with the firm's long-term financial needs. An effective dividend policy maximizes the shareholders' wealth while maintaining financial stability and the growth potential. And dividend decision framework explains how companies involved in determining the appropriate amount and timing of the dividend payments. It begins with accessing the firm's profitability, cash flow position, and the future investment opportunities. Management evaluates shareholders' expectations and the impact of dividends on the market value. Legal restrictions, taxation policies, and financing requirements are also considered. The framework helps balance retained earnings for growth with dividend payouts for the future returns. Its primary objective is to maximize the shareholders' wealth while ensuring the long-term financial sustainability. And the core dividend decision components involves profitability. Uh, that is, the company must generate sufficient profit to support the dividend payments. And next component is your cash availability. Adequate cash flow is essential as dividends are paid in cash rather than their accounting profits. And next is your investment opportunities. The firm's retain earnings when attractive growth and expansion projects are available. And next component is your shareholder preferences. Management considers investors' expectations for regular income and returns. And the next important component is your financing needs. Dividend decisions depends on the firm's future capital requirements and funding sources. And the final component involved is your legal and tax considerations. Regulations and tax policies influence the amount and the form of dividend which is being distributed to your shareholders. And there are certain key financial factors involved in dividend decisions. The company profitability significantly affects the ability to pay the consistent dividend. Cash flow position determines whether sufficient funds are available for distribution. Growth opportunities encourage firms to retain uh, earnings for the future investments. Shareholders' expectation influence management's dividend payout policies. Economic and the market conditions also has an impact over the earning stability and dividend decisions. Legal, regulatory, and tax factors shape the amount and the method of dividend which is being paid to your shareholders. The design thinking approach to your dividend strategy begins by understanding the needs and the company's expectations of the different shareholder groups. The companies empathize with investors seeking regular income as well as those preferring long-term growth. Management define dividend-related challenges such as balancing payouts with reinvestment needs. Various dividend policies are ideated, including a stable, progressive, or flexible payout approaches. The selected strategy is tested by evaluating its impact on the shareholder satisfaction and the company performance. The continuous feedback helps refine the dividend policy to maximize the shareholder value and the financial stability. So I have given certain examples of your dividend decisions which is being made by various corporates in and around India. And to conclude, dividend decisions are the crucial aspects of your corporate financial management, and they determine the balance between rewarding shareholders and retaining earnings for the future growth of the organization. The effective dividend policies consider profitability, cash flow, investment opportunities, and investor expectations. A well-structured dividend framework supports both financial stability and the business expansion. Uh, Design thinking helps an organization develop shareholder-focused and adaptable dividend strategies. Ultimately, sound dividend decisions contribute to long-term shareholder wealth maximization and sustainable corporate success. So I like to thank everyone for such an opportunity. Thank you.